Good morning, traders and investors. Brentster here with your intro. You know, I'm not going to do as fancy of a job as Joel normally does, but you're stuck with me. Uh-oh. Not a sassy, we are not in a sassy market, folks. Triple D has SaaS stocks on his radar, the likes of Salesforce, the likes of Adobe. We're going to get into why he thinks this is a group that is seriously under trouble. We're going to talk a little bit about emerging markets, China outperforming here this year so far. We did just now get Citigroup results, folks. We're going to get to those right after the hop. Greenland, Denmark foreign ministers meeting with JD Vance and Marco Rubio today in DC. We believe that meeting is going to be at 9:30 a.m. Trump with an early morning message on the necessity of Greenland for the safety and defense of the United States. Of course, we got other big bank earnings here this morning, including Bank of America and Wells Fargo. We're going to get you a little preview of big bank earnings coming down the pipeline this week, including Goldman Sachs and Morgan Stanley. Tomorrow, also Taiwan Semi tomorrow, TSM. 8:30 this morning, we're going to get PPI for October, I want to say. I think it is pretty delayed here. I'll have to double check that. We're also going to get retail sales. We got a couple ratings to go over later, brought to you by the Fly folks. Our guest today, Jeremy Schwartz, 8:35 a.m. over at WisdomTree. Brentster, roll that intro for pre-market prep. Here we go.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, pulling up my trade station charts here. Let's take a look at the SPY here this morning. 69 693.77. SPY is trading down a little bit here this morning. Let's take a quick look at the Qs. Why not while we're at it? Qs 626.24. Let's take a look at Bitcoin here this morning. IBIT. I know I'm going out a little bit of an order, folks, but why not? Bitcoin last night, along with Ethereum, rallying, but we've come back down a little bit here, still a little bit higher from around the close yesterday. What else we want to do here? You want to do gold? Let's do gold. Let's do GLD, folks. Gold trading up a good percent here, but silver is the real story if we're talking metals here this morning, folks. Silver currently trading up 6.5%. Looking at the SLV here around 80, but I am looking at spot silver around $92, holding over that $90 level, folks. I thought I put the TradeStation banner up there. TradeStation, these charts, folks, for pre-market prep, brought to you by TradeStation. Chart, analyze, customize, all in one platform. Let's bring in Triple D to the equation here. See how his morning's going. Dennis, how you doing?
It's going. Head on a swivel. There's always news,
Woo!
breaking news right at 8 o'clock. We're getting a hot off the presses. We did get Citigroup earnings here. Earlier this morning, we got Bank of America. Earlier this morning, we got Wells Fargo. Citi always drops right at 8 a.m., so it's always getting us right out the open. I've got the earnings in front of us, although I don't have the breakdown here. Oh, it's one of those they make you go to the company's website.
I know. So let's go to the website here in real time.
I like that.
These results might not even be out yet, folks. The price action
they're out.
They are out.
They top by 11 cents, so they're out. But what they do, so sometimes they actually put it in the press release, and other times they give you a link, and then you have to go to the company's website and then look at the results on the website, which is what we're doing now.
So I got them here too, Dennis. Q4 adjusted earnings 181, a beat about 11 or 12 cents. Sales look like they do miss though, just under 20 billion. Analysts were looking for about 20.5 billion out of Citigroup. I'll pull up the chart here. Give me just a sec. Take a look at the price action on what the hell?
We got it coming.
There we are. What do you on a 1 minute chart here? Or 1 minute
chart?
Yeah,
let's do the pre-market prep or pre-market action here. So you can see the little pop here when they just reported here at 8 a.m. was trading down with Bank of America, trading down with Wells Fargo. I mean, Citigroup's the one. Guy Adami's been talking about it relentlessly on CNBC here for about 2, 3, 4 months, saying how undervalued it is when you compare it to something like JP Morgan. The banks haven't had a great start to the year. They got a good pop the first couple of days, and then they've been leaking here. And I mean, there's been all kinds of headlines here that have dinged them. The credit card stuff, obviously being the main one with the 10% cap. We don't know where that's going, so that'll be on the 20th. I mean, Visa, MasterCard had terrible days yesterday, so it was like a little almost delayed reaction for them. Where the first day they're like, they didn't hit them that bad. The second day they hit them hard. So lots of things to consider. The earnings were fine. So I think, when you're looking at banks, it's like the same thing. They report, the earnings usually are pretty decent. Sometimes they pop a bit and then eventually they drop. But I mean, that's exactly what JP Morgan did yesterday. We can just start with that from yesterday. It popped, went up $3, and then they pulled the rug and the stock was straight down all day. Ugly, ugly day for JP Morgan. So once bitten, twice shy is the investor in these banks here right now. So even though the Citigroup banks are pretty good, and we can just quickly cover the Bank of America results here too. Bank of America beat by 2 cents, and also Wells Fargo. We're just going to cover them all quickly. They missed on revenue, but they did beat on earnings by 10 cents as well. It is the whole once bitten, twice shy here, and banks guilty until proven innocent. And we are in the middle, Brentster, of bank earnings season, because tomorrow we're going to get Goldman Sachs. We'll get Morgan Stanley. We'll get a bunch of regional banks on Friday, PNC, STT, RF, MTB. I had the regional banks as one of the R's in my Burr trade, and that's the only one not doing great so far, because I had Baidu, which has done well. I had Rocket, which has been a rocket ship, and RBLX wasn't doing well until yesterday. And then that just blasted off 10%. So RBLX doing pretty good here now too. But I have basically KRE, and that's pretty much flat for the year so far. So KRE not doing much. Had a good start, and now we've kind of, with this whole credit card stuff, I think as well, it's been weighing on the banks.
Citi is leaking here, Dennis.
This is what they do. They pop and they drop. They're notorious for this. This is just what they do. So that's pretty much the bank action. Now, can they come back? Yeah, sometimes they come back. I think the earnings were fine for Citi. I just think the investor is nervous right now. And the investor is spooked in a lot of stocks here. I mean, we can talk to geopolitical risk in a second, but let's move away from that for a second, because we have separation here happening in this market. There are sectors just getting murdered here. And we have the title for the show, not a SaaSy market. We're obviously talking about software as a service. Software as a service, this has not been the year for the SaaS stocks. I mean, and you can look at CRM. Obviously, lots of spin-offs from CRM over the years. Lots of management have gone and formed their own companies like Workday, ServiceNow. All these stocks look the same. I mean, ServiceNow seems to go down every single day. You can bring up that one. Like, this is ugly. Workday, cannot catch a bid. New 52-week lows. I mean, when they stocks are making new 52-week lows, you tell you got to go. This is now giving back a year and a half of gains. ServiceNow going back to the April lows. CRM back to the April lows. Stop
Adobe
at here for a second, because Microsoft hasn't really sold off much, but it's a services. It's the same thing.
True. Yeah, no, you're right.
Category for sure. Adobe's been ugly forever, but doesn't this Microsoft chart look like it's ready to fall off a cliff? This is like a scary looking chart. You get the charts, where it's like rounding bottom and starting to hook up. This is the opposite. It's starting to hook down. Sure. This one here, folks, doesn't look great. And if we lose, I'm going to say, if we lose the low of the recent move, 464.89, which is 3 points away from here. Yeah. Katie bar at the door, then we're in trouble. We bounced off that low yesterday. We need to continue to hold that low, and support is support until it's broken. And that November low is very good support. You see, you can point it out there where I'm looking there, Brent.
Right here,
464. No. We're looking closer, because you got.
Right here.
If you change this to a daily chart, you'll see it more. I don't know if you want to quickly do that.
This is
you got a lot of data here.
This is a daily.
Oh, this is daily. Okay, yeah. Sorry, October. But you got a year and a half. I'm thinking 90-day. So if you wanted to change it to a shorter term time frame, you've got 90 days of data. October 2025, October 2020. It's good to get some. So stop with the charts for a second. Okay. Sometimes it's great to get that longer term picture, especially when you get stocks breaking down to new 52-week lows or new 6-month lows. You can kind of see where they come from. Has this just this profit taking? Has the stock just had a significant run up? You could probably put Microsoft in that category, because 2025, the first part of it was an excellent part start for Microsoft. But I mean, I look at these names and it doesn't stop there. So you can say, oh yeah, well, it's just ServiceNow, it's just CRM. No, let's go farther and dig deeper. Atlassian, software as a service, TEAM.
Team.
You could go into like DocuSign. That's breaking down looking like new lows. Dropbox has been a disaster. Monday.com is another one. Monday.com doesn't look very good. And then, well, I just got the whole list of Asana, which is, one that Moskovich buys every single day. That keeps breaking down here too. All these stocks kind of look the same. And Jay Rice may be the one that I was trying to point out too. Datadog catched an upgrade the other day. It couldn't even hold up for a day, and they start selling it again. So bottom line, something is going on with the SaaS stocks. This is definitely not a SaaSy market. And what is happening here is agentic AI. I mean, we've got AI, and the market is very worried that AI may actually be able to do a lot of these services that these stocks provide. So you have AI igniting certain industries, igniting certain stocks. Obviously, been a driver for NVIDIA, AMD, AI everywhere. It is not looking good for some of these other companies. And I said it yesterday, and I've been saying it for months, is with Benioff. So if you've got to pay Matthew McConaughey all this money to go on TV and tell you how good of an AI company you are, maybe you're not as good of an AI company as you are. So Matthew McConaughey, obviously hired by Salesforce 2 years ago, and it's all about Salesforce AI and Salesforce, and we're the best AI company, and we're better than Palantir. Well, the stock market's saying something otherwise. The stock market's saying, no, we don't believe it, Benioff, and we think some of your services may actually get displaced. So that is why CRM topped out way back in 2024, and we're looking at it down 100 points from where it was a year and a half ago, despite the Qs and this AI market taking off. So Salesforce has been the one that's left behind, but it has spread like a disease through the SaaS stocks. And now obviously ServiceNow, Workday, Datadog, these stocks. So it's now time to classify. Are you software as a service, or are you benefiting from AI? Because the market is saying software as a service stocks are not benefiting from AI. And that is a major problem for these stocks.
So
AI,
Dennis,
not going away.
You're definitely hinting here, but just to ask you deliberately, if this money is coming out of this theme, where is this money going? What's your initial knee-jerk reaction?
It's went to value. It's moved away, but it's also obviously, we know NVIDIA had a great year. We know AMD had a great year. We know some of these smaller companies, that are obviously benefiting. But what has really happened in the last 3 months is a lot of the AI stocks themselves have kind of had, they've just gone too far. A lot of them gone too far. We know the best stocks in the last few months have really been the value names. They really have. I mean, Burke is not a great indicator for it because there's so many things happening with Burke. But I mean, you can just look at a value index like VTV, a value fund, buying lower stocks. 185, 196, steady as she goes, but made a new 52-week high yesterday. I mean, you can jump into the banks have come off here recently, but so many other stocks that have lower PEs, the drugs, we've talked relentlessly about the drugs, XLV, a little bit of the JP Morgan healthcare hangover happening here again, same thing with CES, but going into the conference here, doing very well. I mean, so you look at value and you think, well, that's where some of the monies went. It has also went international. There's no doubt that international had a fantastic year in 2025. That has continued in 2026. Look at EEM. Despite China, getting kind of harpooned yesterday here, we can still look at the FXI and say, well, it's a pretty decent start to the year. But EEM, which has Japan and a lot of Asia and not directly all China like the FXI does, is sitting up there going from 55 to 58, up 6% for the year. That's a pretty good start. Europe, up for the year, pretty good start. So international remains strong. That could be a little bit to do with the geopolitical situation as well. There's uncertainty with Trump's next move, and the international investors probably just saying, well, maybe we'll just reallocate a little bit of this money here over internationally, where we feel like we have a little more certainty here because we don't know where Trump is going. The Greenland situation is the wild card, like I've been saying with the markets. I think the Venezuela situation was applauded. I don't think it was a bad move, for the Trump administration. It was probably a smart move to get a hold of all that. Greenland would be a completely different, can of worms here because you do not want, NATO to fall apart. I don't know what that means if NATO falls apart. So, and I don't think the market knows what it means here too. And I think that's why the market is spooked a little bit. Also, the Supreme Court's decision on tariffs could come today. And that's a wild card as well. So you have two things, Rubio and Vance meeting with Europe about Greenland. And you also have the potential, the meeting of the Supreme Court and the potential decision on tariffs. So this is a little bit why the market is down here today. Nervousness, probably ahead of that tariff results.
So the Denmark and the Greenland foreign ministers are in DC, I'm sure right now. They're going to be meeting, as Dennis said, with Marco Rubio and JD Vance. We expect that meeting to start at 9:30. And we know that Trump has been going crazy, speaking and tweeting on the importance of Greenland for the necessity of national security for the United States. He tweeted this morning,
He never sleeps.
Ahead of this meeting in DC today, United States needs Greenland for the purposes of national security, period. It is vital for the Golden Dome that we are building. NATO should be leading the way for us to get it. If we don't, Russia or China will. You guys can keep reading if you want to. It's more of the same.
Yes. It's more of the same as that his wishes to take over Greenland is not going away. He's not changing his mind. He has said last week, we will do this the easy way or the hard way. There was rumors that he was trying to have, officials put together an official plan to invade Greenland. We don't know if that was true. Telegraph, was reporting it on the weekend. We don't know what truth lies there. We don't know where, that's going. But what we do know is this Greenland situation has some investors a little bit nervous, and it has ignited the war trade. We keep talking. I know we sound like a broken record, but it's the same stocks that keep going up every day. So we've got to keep talking about the war stocks, because Lockheed Martin made a new 52-week high yesterday, made a new 52-week high today. It's the same stocks going up. The wild card, I would say, is this decision again. If Trump is ruled against on tariffs, I would expect the defense stocks to get a dip. I also expect that dip to get bought, because we're just in a situation where a lot of money's been piling in there. Trump has already said if they get ruled against, he's already got the contingency plan. They're working on it. Says there's going to be other ways. They do not plan on giving the tariff money back, so they will fight that. Just to show you, though, like all the money going into defense, you've got it on the screen here right now. HII. Huge contract yesterday here, Brentster. We were covering this live in the STN room. The number is astounding. Again, this might be for the sector, but HII awarded a missile defense contract with a $151 billion ceiling. This is a company that had like $12 billion in sales last year. So you're talking about like he wants to build some warships.
This is for the SHIELD, the Missile Defense Agency's, the MDA's SHIELD project. This is effectively the Golden Dome. We saw a couple companies that we knew were going to be helping out with this. We had a couple companies in the last few weeks that were disclosing that they were going to be a part of this, like KBR was another one.
Yeah.
Just a little note on these defense contracts. A lot of times corporations are giving the value for the entirety of the contract. We actually don't know, as far as I can tell, chat, help me out. We don't know the portion of this 151 billion contract that Huntington Ingalls is going to be getting. The whole contract for all the contractors that the MDA SHIELD project is giving is 151 billion. So just to be clear there, but Huntington Ingalls, I'll pull up the chart here, was off to the races last night upon hearing about this. Let me do maybe like a 15-minute chart.
It is up here again. It's up another 10 points, 2.5%. The stock has been a monster. Jay says he's long from 280. Congrats, Jay. It's a fantastic trade. But I mean, love Trump, hate Trump. That's not what this show is about. This show is about trading ideas off of the geopolitical situation, and continues to be the play to be long the defense stocks. Like this is, RTX I thought about putting in my, when I was looking for ours.
Yeah.
So just because I'm like, this defense situation, is not going away. Now, it hasn't been the best one. We know Trump has talked negatively about RTX. That's why there's a little bit of a hangover with that one. But there's so many of these names going. I mean, General Dynamics, you can look at that one. Kissing up near a 52-week high. NOC, kissed up near a 52-week high. Now, again, I don't think you should be chasing these things this morning, because if Trump is ruled against on tariffs, I'm repeating myself, today, these stocks probably dip, because $500 billion of that money was supposed to come from tariffs for the defense stock. So all of a sudden they may not get that. I think it's flying under the radar for these names. I think people aren't thinking about that. If they ruled for, if the Supreme Court says, look, the lower courts don't know what they're talking about, and we're ruling with Trump on the tariffs, these things go higher, and they go a lot higher. So that is, going to be a headline that we're going to talk about a lot today. So two major macro headlines here today. One, the meeting with Rubio and obviously Vance over at the Greenland situation, and the Supreme Court decision potential. We say potential because they don't have to rule today. Potential Supreme Court decision on tariffs.
And we are pretty sure that the court case, similar to last week, is going to start at 10 a.m. Thankfully, last week, the court announced right after the start of the commencement of the case, their day's meetings, they said, we are not going to rule on the U.S. tariff case today. Maybe we'll get something like that today if they're not going to end up getting to it, but we will be standing by for headlines after 9:30 for this thing with Greenland. We will be standing by for Supreme Court ruling potentially after 10 a.m. today.
Let's go over the only other thing, because we want to cover the Supreme Court and just finish it. Remember, there's a lot of stocks that import and have been getting dinged with tariffs. Deere, RH, Lululemon, Nike. Those stocks will move opposite the decision. So if they rule for Trump, those stocks are going to get hit. They rule against Trump, those stocks likely to rally. So that's your trade ideas off of the potential decision. But when everybody thought it was going to be Friday, we clearly pointed out that they didn't have to rule. They did not. Was it Friday of last week? I'm losing track of days. When was the ruling? It was last weekend.
When?
Man, I'm getting my days confused.
Was it Friday?
I can't remember.
It was Wednesday or Friday?
Wednesday. Maybe it was Wednesday. So here we go. So maybe it was Wednesday. So here we go again. They're meeting. We're going to find out whether they rule or not. It's going to be big, though, for all these stocks that we just mentioned. Moving back, metals continue to rally. Woo! Silver is unbelievable. Nuts. Don't kid yourself. This is all tied to the same thing that we just talked about. Uncertainty. People invest in precious metals in uncertain times. They don't know what's going on. They don't know what's going to happen with Greenland. There's uncertainty here. Silver is the beneficiary of that. Gold is the beneficiary of that as well. New all-time highs for both. Silver has just been a monster for 2 months. It's one of the biggest moves silver has ever had. It now has a $5 trillion market cap here. I had my kid looking through all our quarters at home and seeing which ones were silver to go take them to the pawn shop right now to get rid of the silver quarters. They said they're worth like $5 or something. But
of course. But what about, later this year in 8 months when silver is over $100, Dennis? Then what would you?
Well, yeah. So maybe you should just be hodling silver. So I have a few of those silver quarters. So I'm hodling here.
Kenny, I'm channeling my inner Kenny Glick here.
85 gets you 90, 95 gets you 100. He's right. That Kenny guy. You know what Kenny does right? Kenny, if you're listening, you know what you do right? You keep it simple. The 85 gets you the 90. The 90 gets you the 95. That is how I trade. You can have, again, stories back to the Bright Trading office in Detroit. I was prop trader with Bright Trading for 20 years. Worked in the Detroit office under Joel Elconin. That's where I met him. And I can remember back in the year 2001. And we've got a trader, and he's a new trader in there. And he's got a chart up there. And he has so many indicators on the chart. There's just everything. And Joel walks over, and Joel's like, where's the price? You have so many lines on your chart. I don't even know what the price of the stock is. How are you making heads or tails? And that person blew out their account. So maybe it was just, coincidence, but when you have so many lines on your chart that you can't even tell where the price is, you maybe have too many indicators up there. Keep it simple. Support, resistance, trends, 50% retracement. That's all you need. And the 85 gets you the 90. That's what it's all about. That's 80 gets you the 85, and the 85 gets you the 90. It's all. Keep it simple, guys. Trading can be very simple. We look at headlines. We try to think simplistically. What does this mean? Because when you try to get it all complex, the market doesn't think in complexity. It thinks simplicity. That's what it's all about.
Can I even go back? Oh my gosh, look, I bugged my trade station because I was trying to go back too far to look to see where there was some potential resistance in silver.
Yeah, crazy move. So 825. We have an 830 number.
We do. We have PPI and we also have retail sales. Let me double check what period we are getting. PPI. Okay, so PPI is for October. So
Okay.
just a warning there. It is very delayed. We are in January, folks, and we are getting our October PPIs because I believe the government shutdown.
Yes.
Retail sales is a little more recent. It is for November. So, I would lean on the CPI info from yesterday. Yes, we're getting new producer side info today, but given that it is so dated, I don't know how much the market is going to put stock into this.
Okay. I don't know either. I think obviously the most sensitive stocks always to inflation data are the small caps. IWM has been
IWM.
unbelievable this year.
Yep.
XBI, but XBI's got the whole JP Morgan healthcare hangover happening a little bit here too.
Sure.
We haven't seen hardly any deals. We were anticipating a lot of deals, didn't happen. It's been it's been a boring JP Morgan healthcare conference. So I think that is a little bit of a headwind right now for XBI because stocks want something to look forward to. They very much look forward to this conference, and when we didn't get any deals, it's probably XBI goes to the back burner for a little bit here. But TLT, we've been talking with Blue Putnam yesterday about long-term rates. They are not responding to the lower rates, at least in short-term rates. I don't know what's going to get it going, but Blue made a lot of good points. It depends on why they're cutting. So, and I didn't think bond investors were looking that deep, but they care about the why apparently. So TLT still sits down near 52-week lows, which is unbelievable since we've cut rates so far. Keep an eye on that though, for obviously this data that's coming in here in a few minutes.
Let me take a quick break to say thanks to our wonderful sponsor for PreMarket Prep, Hive, and then maybe we can take a quick look at Bitcoin, Dennis.
Yes.
I will put up the IBIT right now. And then I want to say thanks to Hive Digital Technologies, a global leader in green powered data centers for Bitcoin mining, high performance computing, and AI. Hive, we are expecting them to have captured 3% of the world's Bitcoin production by the end of last year. There's a QR code on screen right now in the bottom right corner. Scan that to get over to HiveDigitalTechnologies.com where you can learn more about our wonderful sponsor. Thanks again to Hive.
That IBIT chart. So we've been talking about all this support. I've been on the record saying I believe the low is in for Bitcoin. I believe the environment that we're going into is strong for Bitcoin. The whole geopolitical situation, people are nervous. People, the US dollar hasn't been doing great. I mean, people don't know where to go. They hide in crypto. So they're not hiding in like some of these smaller coins, but they definitely hide to Bitcoin. So we're seeing Ethereum and Bitcoin. Both charts look pretty much identical. You can look at ETHE if you want to look at Ethereum. It's a pretty good ETF. Very liquid here as well. The charts look virtually identical. And you know what? I think there's just money hiding here now, and they've stopped going down the rounding bottom. Everything I don't like about the Microsoft, I do like about the Bitcoin chart. I'm hodling here. I'd be buying Bitcoin on dips. You're going to get another dip. It always seems to happen, but it's been putting in its work. And you know what? My bird trade could have had Bitcoin in it as well. I just thought.
Don't say
I
those
had so
things.
many B's in R's. I could have done like the stutter trade. I could have did that. That's so many B's and R's that I want to do. I wanted to do Boeing. I wanted to do Baba. I wanted to do Baidu. I wanted to do Bitcoin. I wanted to do R's. I wanted to do Roblox, and I wanted to do regional banks. I wanted to do Rich Tech Robotics even because I think it's been a year of R's. So it was lots of stocks. But, we can't buy them all and we can't do them all. So we kept it simple and did 4 that I liked. So 1 minute before that data, continuing here.
I got Triple D. I got the SPY chart up. We're gonna watch in real time here. If the market is gonna respond to our PPI and our retail sales data, get you just a quick preview here. We have about 30 seconds until the data for the base reading from PPI. We are expecting a month-over-month increase around. Actually, you know what? I don't even have the estimates for this right now. I think because of the delay. A reminder that the CPI for yesterday was up 0.2% on a month-over-month basis. That was the core reading. Core reading excludes the volatile food and energy space. Here we are about 8 seconds until the reading. I'll also be getting you the retail sales figure. We have 8:30. Stocks are kind of chopping chopping around right here. Nothing too exciting yet. PPI month over month for October up 0.2%. We have retail sales for the month of November up 0.6%. That's better than expected. The core retail sales reading up 0.5% month over month, also better than expected. We were looking for 0.4% increase. The core PPI reading, which is the one that I like to look at for the month of October, month over month, was unchanged, flat. Year over year, we have producer prices up about 3%, base up about 3.5% for the core reading. Kind of a muted response here,
Nothing
yeah?
burger.
Yeah, little
Yeah, let's not
chop, but
sugarcoat this. This is a big nothing burger, at least so far. Initial reaction on the TLT is crickets. Initial reaction on the IWM is crickets. Initial reaction on the SPY is crickets. So, which is not surprising. I mean, this isn't a data point that everybody's like, oh my gosh, the PPI. Look at the CPI. So it's kind of put on the back burner almost immediately here. So not much happening here, but it's nothing to really change the Fed's course of action here, which after that video on the weekend, as Powell is stay the course is what I think he's going to be.
Excuse me, Dennis, a couple of headlines here from the 8:30 breaking news.
Yes.
We have news in IONQ, kind of an interesting one. Probably not one that's going to move the stock right away, but the Department of War veteran Katie Arrington is joining IONQ as Chief Information Officer. So a Department of War, longtime veteran, going to be now the Chief Info Officer at IONQ. Stock is quiet here. Also, a headline from Clover Health. CLOV announces 53% growth in Medicare Advantage membership during AEP this is for January 1st, 2026. Clover has been a name that has been a bit of a darling. Is that fair to say, Dennis?
No, it's been a quiet name, really, I would say. Clover, like a retail. Oh, I mean, from the retail, yeah. Like the
Yes,
retail
yeah,
community
yeah,
likes
yep.
that stock. Definitely not a darling on the charts. I'm long Clover because they present tomorrow at, I believe it's tomorrow night at JP Morgan Healthcare
I think
Conference.
you're right.
So I've been long it just ahead of that. How I like to be long ahead of stuff. So I'm long Clover right now. But interesting headline. We'll see if it get a reaction.
Also, just take a look at the IONQ chart here real quick. IONQ, you can see it's actually kind of like moving lower on this. Just a couple of breaking headlines wanted to jump in there with.
I think we should look at Quantum here for a second because Quantum has been sitting here going sideways. Quantum wants direction. Quantum wants, there's still a story here, folks. This Quantum story is not going away. And what Quantum is going to do in 15 years is going to blow you away. The question is, when is the time to buy these stocks? Obviously, middle of last year, the Quantum rally started. We had a lot of these stocks go up 500, 600, 700%. And, the October bubble burst. Now they're trying to get their mojo back. I've been playing CCCX from the Quantum perspective, Churchill Capitals. It's a Citron pick. It's also, got the $10 support because it's still a SPAC. So you can get your money back, at 10. So every time it gets down like 14, 15, I feel like the downside is, it's a little bit more limited compared to some of these other Quantum stocks, which are wild there. So I kind of like that one. Andrew left us his homework as well. IONQ, QBTS, QUBT, D-Wave, obviously, with QBTS. I mean, these are all interesting charts, but they're all going sideways. And I would say these are in price discovery area here where bears are not in control, bulls are not in control, and they want direction. I think most of these don't have any direction here yet. Like QUBT's done its work, put a nice bottom in around 10, does look like a cup and handle. If you had me bet, I think they go higher, but maybe the market environment's been holding them back to a certain bit too. Certain stocks not performing well. But Quantum, I would just say sideways. Hard to make a call on these stocks right now.
Triple D, we do have our lovely guest in the background, Jeremy Schwartz. He is Global Chief Investment Officer for WisdomTree. Are you ready for Jeremy?
Always.
All right, here we go. Jeremy Schwartz, good morning. How is your morning? How's your week going?
Great to see you guys. Great to be on with you.
You too. You too. Hope you're having a good little Wednesday to get kicked off here.
Absolutely.
So Jeremy, It's been such an interesting start to 2026. You know, you've seen some stocks, and we were talking about the SaaS stocks earlier, which are relentlessly going lower. They can't seem to catch a bid. They had an absolute horrible day yesterday. And then, you know, you have other stocks that are doing really well. Some of the value trades picked up. International's looking pretty good. You know, some of the defense stocks been unbelievable with the increased geopolitical risk. But I want to start asking you about the SaaS names, you know, like Microsoft in particular. Like we saw the move with CRM yesterday. We saw the move with Workday, and you can show these charts if you want there, Brentster.
Yep.
You know, big moves down. What are your thoughts on Microsoft here? Because it's kind of been going sideways, but slowly leaking, and it's not participating in the rallies. Do you have concerns on any of these names?
You know, we do have an ETF that represents, I think, the space. WCLD is, you know, it was a pandemic darling. And, you know, we worked with Bessemer Venture Partners. They're one of the early stage venture investors in all these names. And we launched it a little bit over 5 years ago. This is one that really hasn't, you know, it's been in a tough period. And this is at the core of the AI disruption story. It's funny because I literally right before we came on, I just sent a message to my team that somebody was tweeting it's going to be a generational opportunity for long shorts in SaaS this next few years, because you know, it's going to be who can you replace and who would you just use, you know, these new AI tools to code yourself.
Yes.
Like it could be how hard it is to replace your SaaS is going to be embedded. Now, you know, you get stocks like Adobe and others that have become more like value stocks because people believe their businesses are declining. And you're going to use Notebook LLM for all your graphics, and you don't need Adobe anymore. And so, you know, you have these kind of narratives. And so then the question would be, well, who actually can use AI and offer services? They're no longer expensive stocks. Many of these, Adobe is a good example. Zoom is another example. You know, it's amazingly for Microsoft, which is this best software company ever, just how many problems people have using Teams versus just how clear Zoom is. It's just very, very interesting. And, you know, can Zoom actually turn, you know, if it has all these AI transcripts, can they do it better than others? And can they use AI in a way? I think it's early to say who's going to fully be disrupted. I do think it's a space we're watching as, you know, the narratives come in and you're like, oh, these stocks are going to be completely disrupted by AI. Some maybe, but some maybe not. And so you're gonna have to figure out who can.
What's the low-hanging fruit? Who's going to get disrupted the most, Jeremy? Who do you think? Because you're talking about generational shorts. I know you got a few ideas cooking in there. Who's in trouble here?
I think it's. I can't say I'm more of a basket creator than a knowing the individual names at the moment. Right. I don't know that I have the view on who, like, it's something we think about for that WCLD ETF is who can we tilt it to the AI winners and losers. I think some of those stocks I mentioned, Adobe and Zoom, kind of look interesting to me from just valuations and how their growth profiles have been. And it feels like it's more narrative than actual results at the moment. But, you know, this is, I'd say in the AI trade, you're still early because you've got things like, you know, only winner. It's not the only winners, but the chip companies, NVIDIA being the big winners, and, you know, these SaaS companies are being thrown out, and they're not all going to be big losers. And so I do think,
so maybe there is some baby with the bathwater situation here too, where they're not all going to right now. Like I was looking yesterday, and the moves were just like almost algorithmic in nature because you had them all down. Like CRM was down, then you had Workday down significantly, ServiceNow down significantly, Team, Monday.com. You know, the list goes on and on. Asana, you know, to DocuSign, to, you know, like you can get into those smaller ones and names as well. Dropbox. I mean, all these things, you know, moving lower here. Like to your point, they're probably not all going to be disrupted equally by AI here. So maybe there is some opportunities. I mean, Moskovich buys his stock every day. This guy like owns like 30% of the company now on Asana we're talking about. I mean, nobody's more so just your thoughts here on, you know, potential stocks that maybe are getting, you know, baby with the bathwater thrown out here.
Yeah, Salesforce, another one where, you know, now a 19 PE, it's a lower, you know, the S&P is at 23 to 24 times, so 19.4 PE. It's now become a classic value stock. Now, people make fun of when they added to the Dow, it's gone nowhere versus Exxon. You know, Exxon's gone up like a lot since they kicked out Exxon. They added Salesforce, but it was an expensive stock back then. Now it's actually becoming more like a classic value stock. And so but classic value because people think it's no longer going to grow. So as these things actually can, and I know Salesforce is using AI in a meaningful way, I do think there is that in general, they're just painted with a big broad brush and they won't all be disrupted. So I think a basket like WCLD is one to watch for people who don't want to try to pick the individual names.
Let's go look and just move to other software names here. What do you think? Obviously, we had CES. We have a little bit of a CES hangover where some of these stocks have moved down since Consumer Electronics Show. NVIDIA has kind of held on, but kind of went sideways. AMD had a huge day yesterday, caught an upgrade and really blasted off here too. I mean, is this going to continue to still be the year of AI? Are we still going to be talking about this? Like, value has led the way so far in 2026. Does the AI stocks and story come back?
It's going to be with us for some time. It's not, this is early in the innings of how we're all figuring out to use it. So what you're going to be looking for, what I'm looking for particularly as we get through earnings season is what are the companies saying about their margins, their hiring plans. You know, you're seeing all these stories about, you know, even Walmart saying we're not going to hire more people, but we're going to, you know, you're going to get this operating leverage in businesses. And so I do think the outlook for hiring is going to be contained. And as you get revenue growth, you know, you'll flow to the bottom line. So I expect that sort of broadening story that small caps will see better earnings growth. You're starting to see it in the estimates for like the S&P 600 having better estimates than the 500. It's got to deliver. And this reason why they're like half the multiple of large caps is because their earnings growth just hasn't been there. But if you can see it show up, I do think the winners will evolve from just the chip companies to the consumers. And so I think the consumers are the AI. And so that is a big theme that I think is going to be over the next years.
And then let's move to the value names. We've seen, you know, a lot of stocks, this rotation here, maybe away from tech in the last couple of months. You know, we've seen a lot of stocks like the drug stocks, which have ridiculously low PEs. The banks were having a pretty good time until they got harpooned recently by, you know, the credit card thing with Trump. What are your thoughts on value in 2026?
Yeah, our flagship value fund is WTV. It's like my favorite story for this. It has a 12 to 13 PE, so literally half the multiple of the S&P. It has a 7% shareholder yield. That means like they're doing about 2% dividends, a little bit over 2.25 to almost 5% share reduction. So these stocks are not just saying, we got a low multiple. The management buying back considerably, on average, almost 5%. So these people are saying, we do think our stock is cheap. I love those kind of plays where the management is investing with you and they're reducing their shares outstanding. So you don't need a lot of real earnings growth if you're buying back 5% shares. I mean, that's a considerable earnings magnifier by itself. So I think this is like my favorite of the broadening out stories. Now, interestingly, the top holdings are actually Meta and Google, but you know, I think Meta is a classic value stock. It is underpriced. People don't believe it. It's using AI. They got the narrative on we're spending more on CapEx they didn't like. They sold it off last earnings, but they are classic prime beneficiary. This is like the stock that is symbolic of actually benefits of using AI. AI is getting people to spend more time on the platforms. They're servicing better ads. So it is is the question of, is the AI spend paying off? In Meta, it is. It's a classic example of it. And valuation's low. They're hating on Zuck's spending plans, but I think this is one of the classic big tech value stocks.
I mean, other stocks you're holding, I'm just looking at the WTB holdings right now. Walmart, Southwest Air, Citigroup, United Health, Johnson & Johnson, Berkshire Hathaway's in there here too. So fairly diversified, really, when you look at this. You found the value in all sectors here, Jeremy.
It is, that we do try to be thoughtful of the relative tilts versus something like the traditional value names. I'll tell you, we're writing a paper on the benchmark. This is a very nerdy paper, but if you look at the S&P 500 value, do you know what is now a top holding or in the top few holdings of S&P 500 value? Tesla. Tesla is near a top holding of S&P 500 value. I'm not joking. And
how does that work?
Yes, exactly. And so it's kind of crazy. I mean, it goes down to all the nuances of methodologies. They have a way. This is probably one of the most expensive stocks in the market. And
100 times sales.
Yeah.
So
well, maybe not that. 100 times earnings. Sorry, I said sales. 100 times earnings.
I think it's even more. I think it's like 200 maybe.
I'm going to look.
You might be right. I've got a dashboard. I gotta pull it up.
I'm going to look right now.
The way the S&P divides their indexes, they have these, pure value growth, and then they have their mainstream, their biggest funds, like try to subdivide the biggest stocks. Basically, what happens if your growth profile slows down, so that actually you're an expensive stock, your growth slows down, you can get put into the value index. And so it's not that it's value, it's that it was growth profile was slowing down. And so people need to look under the hood. I mean, WTV is not going to do that. WTV is classic, deep value, high short-term stocks, will be much more pure play. And you'll see things like Tesla in large S&P 500 value. So you got to know what you own.
Wow. That's unbelievable. You can think of Tesla as a value stock. So, okay. Fine. Like, before we let you go here, just give me your thoughts here as we enter 2026, like maybe the macro picture more than anything, Jeremy, because, we have a lot of uncertainty. We have increased geopolitical risk with Trump, and the Venezuela stuff, and then the Greenland situation, obviously the tariff war with China. We get the Supreme Court ruling potentially today on tariffs here. Thoughts on, what does this all mean for the markets?
I mean, the Q3, Q4 GDP is from 4 to 5%.
That's huge.
Gangbusters.
Yeah.
And we're not hiring that many people. So, that sets up to be, again, my point on AI productivity, that, you're going to see inflections on earnings growth, I think, is the story. So I think you're going to have another very good year on earnings and across the board earnings. So again, to the broader economy, not just the mega cap tech company. So to me, that it's the backdrop is, yes, there's risk. There's always risk out there. I think there's a lot of interesting opportunities still in that defense. The geopolitics, we get concerned we're going to have these blowups. I think Iran is going down this week. There's a lot of stuff happening in Iran.
I mean, he's telling U.S. citizens to get out. Like that's
there's stuff happening. But I think the spending on defense is very, very bullish for Europe. It's very, very bullish for Japan. The innovations, the great innovations across time come from your spending on defense. Like the internet came from spending on defense. Your cell phone was all innovations tied to things that we spend on defense. So, the U.S. has been the only leadership in real innovation, and I think you're going to see more of it internationally. That's a backdrop for the next 5 years, that you're going to just see great innovations come out of these places. So, I'm bullish international. I think U.S. economy is going to be fine. I think the defense and geopolitics is actually net bullish, not net bearish. And, there's a lot of noise about the Fed, but they're on track. They're bringing rates down, and, they're no longer a major obstacle to good. A few years ago, we were very concerned they were too tight. They brought things down. They're no longer a major obstacle. And, things are on the right path there too.
All right, Jeremy, thanks a bunch for your time today. Jeremy Schwartz over at WisdomTree. Jeremy, I wanted to ask you about the two funds that you have on your screen behind you, the gold mine, the GDMN and the GDE, but I mean, maybe we save it for our next time. If you want to give a little quick heads up on what those are, go for it.
30 seconds. I think GDMN might have been the best performing ETF there was last year.
Really?
It has both gold miners plus gold futures. So it has a form of leverage, but not, it's not like 2 times the daily reset that you get in some of these products. But as you see, the commodities sector being hot, silver's hot again. I think the big question that we started to solve for is, what do you sell to add gold? And something like GDE is your core large cap S&P 500 like stocks, but it adds gold futures on top, so you don't have to reduce your equities to add gold.
Nice.
That was like our second best performing ETF last year. I think for people, they've been underallocated to gold. A neutral portfolio weight to gold on my estimates is like 10%. Most people don't have anywhere near that, and so these are just two funds that can help you get more gold in the portfolio.
Awesome. I think that was about 30 seconds. So nice work there. Thanks for your time this morning, Jeremy. We'll be talking to you soon.
Thank you.
All right, later.
Thanks, Jeremy.
Good interview, Triple D. Thanks for leading there. Good to hear Jeremy's.
We got 10 minutes left in the show. Obviously, we got our segment coming, rating the ratings, and there's a few here to talk about here today.
Let me run the intro.
Let's do it.
I like the little back scratch at the beginning there.
It is pretty good. Nice.
That's pretty good. Thanks, Josh. Again.
Did you make that for the you?
Josh recorded me. No,
Josh recorded you just spinning the records. Nice. All right, we'll get that fly overlay up there for you here, and we're going to dig down deep, and we'll look at a few ratings here today. It was kind of quiet on the front. I think starting with the downgrades here today, we can maybe do that.
Okay.
Obviously, Fly on the Wall sponsoring this segment for us here. Big one, probably for me on a personal level. Again, another Rivian downgrade here. They are not liking Rivian. This is the second one this week where UBS is the culprit this time, downgrading Rivian to sell. It shrugged off the first one. Can it shrug off the second one? Stock chart's not looking great. I own this stock. I do like this stock. It's back to where I bought it. So, there's the trader in me saying, why didn't I sell it at 22? It's coming all the way back in. I think it can be a story for 2026, but right now the story for 2026 is not high-priced or companies that don't make money trades. So, this obviously is still a long ways away from profitability. The trucks are pretty cool. Let's just dig down and give us some color here from the Fly.
Sure. Yeah, and want to say thanks to our new sponsor, The Fly. News before it's news is their nice little slogan over there. This is on screen inside the Fly's platform. You're getting to see a little bit into it. Really nice interface here. Really nice quick search. You can remove the search here. I think you saw me click the headline to expand here. Let me just read a little bit of color. Fly is super good with their ratings, their sell side coverage. They're the best out there, I would say. UBS downgraded Rivian from neutral to sell. Price target actually raised by $2 up to 15. The firm cites elevated expectations for the downgrade. Rivian shares are, quote, prone to sentiment swings, and the stock is up 15% since the company's autonomy and AI day on December 11th. UBS believes most of Rivian's
I'm going to challenge that right away.
Yeah.
So keep going. Yeah, keep going.
UBS believes most of Rivian's AI-related news is out. It also thinks expectations may be too high for the R2 launch, which is an upcoming model. Let's hear your refutation.
Well, I guess they're technically right, because that was December 11th was the low of the move there when the stock got down to 1573. But then you had the huge move up to like 22.5, all off the autonomy. Like, this is what put it on my radar as well. I mean, Michelle or Mish, obviously, over in the STN room, she comes a lot of times. This one, it was one of her picks. So shout out to her. But, what really put it on the radar for me was they're looking, to get level 4. They're talking about, full self-drive 2028. I mean, the trucks, I had a chance to drive one in Vegas back in October, and I was like, this is an awesome vehicle. Like, it is really the power of it. Unbelievable. Now, they're not cheap. This is a luxury vehicle because you're talking way over $100,000 for most of these, or at least, getting close to that pricing point. So it's not a cheap vehicle, but, an unbelievable ride. I was really impressed, and then, you just think about, Ford backing off, GM backing off in EVs. It kind of opens up a gap, in my opinion, like Ford getting rid of the F-150 is not bad news for Rivian, because it starts to open up a gap for those people who want, an EV truck. Now, again, it's not an F-150. These Rivians are more like a mid-size pickup, but I mean, still fun vehicle. So I kind of like the story here still, but unfortunately, this story is just cooled off, here early in 2026. I think it has the potential to get hot again. I think Rivian is going to potentially be, a major player in EV here, but, right now the story's gone cold.
Let's do at least one more rating here. I know you had Okta on your radar from this morning, Dennis, and I believe that was
an upgrade
to overweight at Stevens.
Yeah, and the chart looks productive here. I mean, it's done pretty well in 2026. We've seen some of the 2025 laggards, and Okta was a laggard in 2025. Again, if you look at where it started the year and where it finished the year, you can say, what are you talking about? I'm looking at what it's done, though, during the majority of the year. This was a $127 stock in May. It's been down most of the year, most of the back part of that. So you could have had a little bit of like tax last night, kind of a little bit. So I think it did get a little bit of the January effect, a little bit of a pop here into January. The laggards to leaders kind of play here. It looks okay to me, but I'm not jumping in and saying, yeah, man, this is the play. So I'd say guilty kind of until proven innocent. Still overall, I mean, you've been in an overall downtrend for a while. If you could get back up over 100, it starts to look a little bit more interesting to me. But, from my point right now on Okta, I think it's a no touch.
And I pulled the chart down while you were going through there, so apologies, but I wanted to read a little bit of the color here from the fly for this rating. Let's see what the analyst had to say, citing an increasing probability of growth acceleration materializing over the course of 2026 and what the firm views as an attractive risk-reward setup. When you get that risk-reward comment by a sell-side analyst, it's always a bit of a lame call. Sorry to say, but just a little heads up there. In 2026, the firm expects cybersecurity to remain a durable growth area supported by a stable and resilient demand environment. Those are the analyst views from Stevens, not my thoughts. Just want to make a little note there. Any other ratings that were especially exciting on your radar today?
There's a lot of names that we don't really follow closely. And I mean, you had Seaport upgrading GPM, FLYW, which has been moving as of late, Wells Fargo upgrading CTAS, Morgan Stanley upgrading Nutrien, which is NTR. So a lot of like smaller names. Probably Wolf is an interesting one. They're upgrading Cheniere, which is LNG. Obviously, looking at energy, natural gas, and LNG here. Been a quiet stock, not doing much. Obviously, we were waiting for that S&P ad on LNG for the longest time. I'm not even sure if it ever happened, but this one's just, a little quiet stock that just doesn't seem to move around a lot here. Wolf upgrading it today. It's getting a little bit of a lift here. But, that's just one more that was had on my radar.
All right.
CELH, I did not see CELH.
Celsius.
CELH?
Let me check. Look in.
I'm not sure if that's it's a price target raise. So Crow, that's actually not an upgrade. It's a price target raised by UBS, but I don't mind covering CELH because we haven't looked at it for a while. It's a stock that, was a darling, retail darling back 2022, 2023, 2024, almost hits $100, as close as you can get, $99.61. And then the dreaded rug pull, and then the growth starts to slow. The nosebleed PE comes down to almost value territory when it got down to $21. And then it has rallied from that. We talked about this when it was at 27 or 28, saying this is quietly starting to turn into a value stock. And now, it's come back up and it's 52. I'd say a little bit more in the middle of nowhere here for Celsius.
Yeah.
But, wow, I just look at that chart. That's a nice looking chart. They're clean charts here, Brentster. These are TradeStation charts, a little bit different background, a little bit different color scheme than Mr. Elconin. Let us know if you like these charts here, because we can keep moving around and adjusting the charts. I also just like having one chart because I can focus. I'm a person that needs to just focus on one thing. Maybe I have some ADHD that I can't focus on two things at once. I want to focus on one thing and the thing that I'm talking about. When I see two charts, I'm like, well, I don't know where to look. So
I do like looking at a few charts, but I think Joel's thing has been he has trouble switching between the time frames maybe, and like check this out, Triple D. So I don't even click anything. As long as I'm in the graph, as long as I'm in the chart, I can just type in 15 minutes, press enter, and it changes. Once you're in a minute view, I can just press enter, and it goes to the 1 minute chart. I can just press 5, press enter, and it goes to the 5 minute chart. If I want to switch back to like a zoomed out chart, I have to type in daily. But I mean, this is easy, folks. And I do want to, like, I am not great with the charts, especially, on my laptop here. So, a little bit of apologies. We do miss Joel's chart prowess, but, We'll get Joel's charts back next week. Joel's going to be out the rest of the week, folks.
These are clean though. Nice clean TradeStation charts here, so I like them as well. So, okay, thanks to the Fly again. Thanks to Hive, obviously our show sponsor here too. So, sponsoring the entire show here. We appreciate obviously all the work that's done over at Hive Digital and Hive stock. We didn't get a chance to talk here today, but starting to perk up a little bit here too. Turning around and had a great day yesterday. So HIV is starting to show a little bit of life. 1 minute left. Overall thoughts. Again, I want to summarize, what you want to look at for today. Like pre-market prep, we want to prepare you for the trading day. There are two main stories here today. One is the meeting with Greenland situation, and two is the ruling by the Supreme Court on tariffs. So we've talked about the implications for that. And, I think you're going to see defense stocks move with the ruling. If they rule for Trump, defense stocks go up. Rule against Trump, defense stocks go down. And on the opposite coin, some of the beaten down, or some of the names that have had tariff impacts, like a Deere, Lululemon, Nike, some of your retail apparel stocks there, probably want to, see Trump ruled against here.
Want to just give a little programming note here, a little preview for our guests real quick for the rest of the week. 10 a.m. today in Stock Trader Network, Mark Chaikin Analytics. Mark is on a lot of Wednesdays. I think in 2026, we're going to have him on basically every Wednesday in the STN room. Tomorrow in pre-market prep, Greg Weldon from Weldon Financial, and in STN tomorrow at 10 a.m., Eric Kroll. He is like our IPO guy. He knows the IPO market so well. It is a really good insight to get from him. And then on Friday in pre-market prep, Tony Pollock from Real Life Trading at 10 a.m. We're going to be getting Money Mitch trading live in the STN network. And one more little programming note here, folks, today at 1:30 on pre-market prep YouTube, CC Legator's Options Unchained, his weekly options show. I'm going to be hanging out with CC, see what he's been looking at. Folks, we're going to jump over to Stock Trader Network where we will keep this conversation going. Thanks for a good show today, folks. We'll see you tomorrow.